Welcome. In this video, what happens if we buy 50K Zbcn today? We will analyze this. Don't forget to subscribe, like, and please watch to the end to understand.
First, let's analyze Zbcn. The ascending trend pattern observed on the chart is considered a strong and positive formation in technical analysis. Such trends indicate that buyers' interest and confidence in the market are increasing. If the price moves in parallel with an upward trend line and regularly touches this line, it shows that the uptrend is healthy, balanced, and sustainable. In other words, if the market rises steadily with pullbacks rather than just sharp jumps, it signals a healthy upward movement. For investors, this kind of price action is highly favorable, as it reflects market stability and limited selling pressure. Each touch point on the ascending trend line is essentially a buying opportunity area. At these points, buyers step in and push the price upward again. If this happens multiple times, meaning the price consistently bounces off this line, it turns into a confidence zone for investors. These touches demonstrate that the market is moving with discipline and adhering to technical analysis principles. As a result, traders who read charts gain confidence in making their next decisions. Ascending trend lines serve as dynamic support levels. That means they're not fixed prices, but change over time. So while the price may pull back during an uptrend, these pullbacks usually stop around the trend line, where buying pressure often resumes and pushes the price upward again. If this line continues to hold, i.e. if price keeps bouncing from it, it shows that current buyers remain in the market and new investors are entering with confidence. A well-functioning uptrend signifies structural strength in the market, balanced volume, and buyer dominance. Unlike speculative or manipulative price moves, trends that continue steadily over time are the ones that yield the greatest returns for investors in the long run. Investors who can remain patient during such rising trends can view every pullback as a new opportunity and buy at favorable points. This increases profitability and encourages trading based on data rather than emotion. When the price moves by touching the ascending trend line, it indicates a healthy continuation of the upward movement. That's because prices that rise without correction are typically unsustainable and may end in sharp crashes. But a price action that touches the trend line represents a zigzag but generally upward path. Such movement builds confidence among both retail and institutional investors. When price respects a certain structure, rule, or discipline, it positively affects market psychology. As more traders notice that the price respects a trend line, they become more inclined to buy from that area again. Additionally, each touch on this kind of trend line carries psychological importance, not just technical. As traders see the trend line hold, they start viewing it as an unbreakable support. This increases buying volume after each touch. As confidence grows in the market, it becomes more difficult for price to fall below the line. And as the price continues to bounce off the trend line, it encourages other investors to join in, pushing the price even higher. This creates a chain reaction that supports the trend's continuation. Trendline touches are also important for creating investor strategies. For example, every touch on the trend line can be considered a buying opportunity, while a stop loss can be placed just below it. This way, the investor enters in line with the technical structure while minimizing risk. Such strategic approaches help investors stay disciplined over the long term. They realize that the market doesn't move randomly, but instead fluctuates within a certain structure, and they manage their positions accordingly. At the same time, price action respecting the ascending trend line also shows that market psychology is positive. Because the market is not just about charts, every price move reflects the emotions, expectations, and decisions of investors. If the price sees buying pressure every time it hits the trend line, it means investors remain hopeful, renew their confidence, and continue to believe in the market. These emotions are one of the strongest forces behind price movements. Technical analysis doesn't just rely on lines, it also draws strength from the emotional impact of those lines on traders. Every structure where the ascending trend line holds strengthens investor confidence over time. Each touch becomes a new buying zone, which in turn makes the price more resilient. Especially when such rising trends are supported by bullish breakouts or continuation patterns, it is a positive sign for trend sustainability. When price rises while touching this line, it often indicates potential to reach higher resistance levels. Investors tend to conduct high-risk reward trades on such chart setups, as the trend line not only acts as a strong support, but also serves as a springboard for reaching higher targets. In conclusion, the presence of such an ascending trend structure shows that price is moving upward in a stable manner, and that every pullback presents an opportunity for investors. As long as this structure remains intact, i.e. if the price does not break below the trend line with confirmation, positive expectations can be maintained. According to the principle in technical analysis that the trend is your friend, as long as price respects the trend line, investors should remain patient and disciplined, because in the markets, the biggest gains often come to those who wait patiently in healthy upward trends. Therefore, price movement that touches the ascending trend line is an extremely positive sign from technical, psychological, and strategic standpoints, and one of the strongest signals for a continued uptrend. But of course, we can't make decisions based solely on trend lines, so let's look at some other metrics too. Stay tuned.
In technical analysis, when the price is expected to rise by the same amount as a previous upward move, this situation is generally referred to as a measured move or symmetrical price projection. This approach gives investors a potential target level that the price may reach if it replicates a previous price move. Let's now explore this approach step by step in detail and explain why the 0.028 level has been identified as a potential target, using a thorough 15,000 character explanation. First, in technical analysis, the upward or downward price movements over a specific time frame are highly valuable for investors. This is because such past movements often reflect investor psychology, supply-demand balance, and the behavior of market participants, which tend to repeat over time. Therefore, the size and duration of previous rallies become reference points for future similar moves. For example, if the price previously rose from 0.010 to 0.018, that would be a 0.008 increase. If the price later corrected and began a new upward movement, technical analysis logic suggests that another move of the same magnitude might occur. In that case, if the new move starts around 0.020, adding 0.008 would project a target price of 0.028. However, in order for the price to reach the 0.028 target, certain conditions must be met. The first of these is the preservation of the current trend. If the existing upward trend line remains intact and the price continues to bounce off that trend line and move higher, it signals that investors still expect an uptrend. This increases the likelihood that the target will be achieved. On the other hand, if the trend line is broken, this scenario may become invalid, or the target may be reached with a delay. Volume is also an important indicator in achieving such a price target. If trading volume increases during the upward movement, it suggests that new buyers are entering the market, and the rally is being supported by a broader group of participants. Such a scenario shows that the 0.028 price level is being supported not only technically, but also psychologically. As more investors enter the market, the price can more easily reach higher levels. This target price is also closely related to resistance levels. If the price has previously traded around 0.028 without facing significant selling pressure, meaning the area is technically considered a gap or a low liquidity zone, then reaching this level would be easier.
The question of what will happen if we buy Zbcn today is not merely the result of an investment decision, but rather a matter that must be considered within a much broader context, including the future economic environment, the investor's patience, market conditions, and the development of the project itself. Of course, even a simple mathematical calculation can provide investors with a fairly strong projection. At this point, evaluating the potential future value of purchasing a specific amount of Zbcn today is one of the fundamental pillars of a rational investor approach. So, let's take a detailed look at the potential future of purchasing 50,000 Zbcn at today's price. Today, the unit price of Zbcn coin is around $0.0055. This price reflects a combination of many factors, such as current market sentiment, trading volume, supply-demand balance, and the current state of the project. One of the most reasonable and fundamental questions that may arise in the mind of an investor at this point is, if I buy 50,000 Zbcn today and this coin appreciates in value over time, how much profit would I make? First, we need to clearly calculate how much we would need to pay to purchase those 50,000 Zbcn at today's price. Buying 50,000 Zbcn at $0.0055 would cost a total of 50,000 times 0.0055 equals $275. This means that at the current price, we can acquire a large quantity of the coin with a relatively small investment. In other words, with a capital of just $275, one can own 50,000 Zbcn under today's conditions. The advantage here is that by purchasing a large quantity at a low price, the investor can benefit significantly from any potential future price increases. This strategy is particularly sensible for low-priced projects with high potential, as any price increase can multiply the value of the investment. So, what would happen if Zbcn reached $0.028 in the future? This would be our potential target price. This target could be determined based on previous upward trends, technical analysis data, and the possible development of the project. Let's now calculate based on this target price. If we hold 50,000 Zbcn and each reaches value of $0.028, the total value of our coins would be 50,000 times 0.028 equals $1,400. That means our $275 investment could turn into $1,400 in the future. This represents a nearly 5x return on investment. In other words, our capital would increase by approximately 409%. That's a significant return, and in the cryptocurrency markets, such gains are entirely possible with strategic purchases at the right time. However, at this point, we must also consider the psychological and strategic aspects of the investment, not just the numerical data. The cryptocurrency market is highly volatile, which makes patience, discipline, and knowledge extremely important in the investor's decision-making process. An investor who buys 50,000 Zbcn today may face short-term price drops while waiting for the coin to increase in value. In such situations, it's crucial not to panic, to stick to the long-term strategy, and to avoid emotional decisions. After all, the biggest gains are usually earned over time by patient investors. Especially with coins bought at low prices, it may take some time to reach the target price. During this period, various manipulations, news impacts, and general economic conditions may cause price fluctuations. But if a project has strong fundamentals, a solid team, and an active community, the probability of price increases in the long term is high. Therefore, the investor should not only look at price charts, but also pay attention to the project's technical infrastructure, vision, and roadmap. If Zbcn shows progress in these areas, the $0.028 target price can certainly be reached, offering substantial profits to investors. One of the most important strategies for low-priced coins like Zbcn is to lower the average purchase cost by buying in stages. That is, if the price drops further, additional purchases can be made to reduce the overall average cost. For example, if the investor initially bought 50,000 coins and the price drops, a second purchase could bring the average cost down even more. This strategy results in higher profitability when the target price is eventually reached. However, the most important point here is to ensure that the amount invested does not strain the investor's personal financial situation. In other words, the investor should only invest money they can afford to lose without affecting their daily life and build a strategy based on the potential for that amount to grow in the future. With this strategic investment approach, acquiring 50,000 Zbcn with a relatively small capital of $275 is quite advantageous. Considering the high return potential that cryptocurrencies offer, this amount could yield significant results over the long term. At this point, the investor should view the coin not just as a buy-sell tool, but as a long-term partnership in the project. Those who trust the project, follow its developments, participate in the community, and wait patiently are usually the ones who make the highest profits. Therefore, buying 50,000 Zbcn is not just a financial transaction, but a strong position taken for the future. The possibility of Zbcn reaching a price of $0.028 of course depends on many factors, such as the project's growth, market recovery, increased investor interest, and global economic conditions. However, if this target is determined based on technical analysis, it gives investors a vision. This vision encompasses both mathematical clarity and psychological preparedness. Having a target price allows investors to make more rational decisions.
Without a target, an investor may lose direction during every fluctuation. Therefore, having a target like 0.028 provides direction and helps maintain patience. Additionally, what the investor should do once Zbcn reaches this target is also important. Should all the coins be sold at once, or would it be wiser to cash out only part of them? The answer depends on the investor's risk appetite and goals. For example, an investor who holds all 50,000 Zbcn could sell them all at the target price and make $1,400 in one go. Compared to the initial $275 investment, this would be very satisfying. However, some investors believe the coin could go even higher and choose to sell only a portion while holding the rest. These kinds of strategies allow the investor to lock in some profits while still benefiting if the coin reaches higher price points. In conclusion, for an investor who wants to buy 50,000 Zbcn today, the investment amount is just $275, an extremely accessible level. If this coin eventually reaches $0.028, the investor would hold a position worth $1,400. That's nearly a 5x gain. This is highly attractive for investors seeking high returns with low capital, or those looking to evaluate long-term growth project opportunities. However, it's important to remember that this process requires patience, knowledge, analysis, and strategy. The cryptocurrency market offers significant profits, but also serious risks for uninformed investors. Therefore, investors must always act consciously, create a plan aligned with their goals, and base their decisions on analysis rather than emotions. With this approach, a $275 investment could eventually turn into the dreamed $1,400 or even more.
I wish you all a lot of profit. See you soon.